Oh boy, here we go. I was hoping that I would not have to make this particular video here today because, as you can see by the title, the numbers that I'm about to share with you guys, they don't seem like the best numbers. In this video, we're going to be talking about the Canadian and US jobs data for November 2024 that came out just this past Friday on December 6th, 2024. And as I said, you might want to buckle up because these numbers, they don't look so good. Now, I might be exaggerating a little bit. I hope I am. You can tell for yourself. But before we get into it, I ask that if you get value out of this video, please drop it a like, subscribe to the channel, and leave me a comment. Let me know what your thoughts are. Give me some feedback. I would love to hear from all of you guys. One last thing before we get into it. I do like watching my own videos back on 1.5 to 2x speed. So I would recommend the same. But as I've said before, as I've promised, I am trying to make these videos shorter and more concise. So I hope I've done that here. You can tell, again, by the length of this video. But with that said, I hope that you get a lot of value out of this and that you enjoy. Let's jump right into the data. So firstly, we're going to start with the Canadian data. We had 51,000 jobs created in November. We had increases in wholesale and retail trade, construction, and some other sectors. We had declines in manufacturing, transportation, and warehousing, and natural resources. Now, right off the bat, you might say, well, 51,000 jobs created? That sounds great. Why is that a bad thing, Puya? We didn't have a decline in the number of jobs created. Well, the reason that is not so good is because we have to dig a little bit deeper and look under the hood, as they would say. Unemployment in that same month rose to 6.8%. To put that into perspective for you, that's an increase of 0.3% compared to the month before, and that's the highest since January 2017, excluding a few months in 2020 and 2021, but we disregard those numbers because the numbers we had during those 2 years in the pandemic are not a good reflection of a healthy economy, so we disregard them. And to go back to the numbers, the total number of unemployed people went up to 1.5 million. That's an increase of 87,000 since the prior month and up 276,000 since last year. That's an increase of 22.2%. That's a lot. Now, what this has resulted in is we have increased the likelihood of getting a 0.5% interest rate cut. Currency markets stepped up bets for a 50 basis point rate cut to 80% after the employment report, and before that it was 55%. And you might think that's a good thing, but unfortunately, I hate to be the bearer of bad news, but that is not the best thing ever, because the Bank of Canada isn't decreasing rates because they're thinking about the average buyer who's waiting for the rates to go down to go out there and buy, and for the sellers who are on the sidelines waiting before they list because they think there's going to be more buyers out there with lower interest rates. The Bank of Canada is not decreasing rates because of that. They're decreasing rates because they're afraid of a recession. And right now, Canada really cannot afford another 0.5% cut in interest rates. The reason is, right now, the Fed fund rate is at 4.75 and the BOC overnight rate is at 3.75%. In English, that means there's a 1% difference between rates in Canada and the United States. What that does is, number one, it affects our currency. That's why we see Canadian dollar compared to the US dollar at some of the lowest levels we've seen. And other than that, it also discourages investment in Canada. For example, right now, treasury yields in the US are higher. If you take your money and put it in a CD in the United States, which are the equivalent of GICs that we have in Canada, those are paying you much higher interest rates. Now, albeit it's not the end of the world, it's like a percent difference, but at the end of the day, investors they're going to look at where am I going to get the most bang for my buck, and they're going to go to the US and put their money there where they can get higher interest rates. And that's why, again, we see the Canadian dollar get affected, and that does affect you and I. You might ask how? Well, the grocery prices that we pay will get hit because we do have a lot of imports from the US, and not only groceries, but everything else that we import from the US. In fact, for the US, it's much better because anything that they import from Canada is going to be cheaper now, but not for us. And that then puts more pressure on the economy in Canada and increases the likelihood of a recession and creates a negative feedback loop. So that's why I don't think it's a good thing to get a 0.5% cut. A lot of realtors out there might come out and say, oh, this is great, but this is not a good thing for the underlying economy. And that's why I'm not very happy to see this. But again, I hope I'm wrong. I hope we can avoid a recession. If anything, with the faster cuts in interest rates, we might be able to avoid a recession, but in the short term, it definitely does put a lot of downward pressure on the Canadian economy, which then isn't good for recession. So you see why it's kind of like a double-edged sword. So going back now to the data, I do want to compare these to the US data. And this is where I'm going to say this. You might have looked at the stock market recently and seen that it's at all-time highs. In fact, on Friday, we had a big rally. Now, the reason was because the numbers in the US were a little bit better than expected. Unemployment rates still went up to 4.2%, but it was as expected. And the number of jobs created was 227,000 versus 214. And we had an upward revision in numbers in October, 36,000 versus 12,000 that was originally reported. And now they're saying that, the October numbers were impacted by the hurricanes and the Boeing strikes and this and that. Now, this might be true, but again, I think there's a deeper underlying issue, which is when we look at these monthly job creations in the US, we see a trend that's going down, and that's not good. And we take a look at US unemployment rate, it's going up steadily as well, just like it is in Canada. And then as a result, that's not good for either of the US or the Canadian economy. Again, another thing that we see is a broader measure that includes discouraged workers and those holding part-time jobs for economic reasons moved slightly higher to 7.8%. So more people taking out part-time jobs because they're hurting, because of economic reasons. That does not sound like a good thing. So to put this whole thing together, we have Canadian versus the US dollar at multi-year lows. We have a 50 basis point rate cut now pretty much expected by the Bank of Canada in a couple of days here, versus the Fed is only expected to cut rates by 0.25%. What that will do is it will, in my opinion, even further intensify the issue, because now there's going to be even a higher difference. Right now there's a 1% difference in the interest rates. There's going to be a 1.25% interest rate difference as a result of this. And I don't see that as being a good thing. Again, you might say that for Canada, especially for the real estate market, this could be a good thing. But if we go into a recession and that buyer doesn't have a job, then it doesn't matter how low the interest rates are. If that buyer doesn't have a job, they simply cannot afford to even buy a house. So then forget about the interest rates. So listen, I hope I'm wrong, but at the end of the day, I share these numbers and these data with you guys so that you stay informed, because the more informed you are, the better prepared you can get. With that said, again, I hope you enjoyed this video and you got value out of it. If you did, please drop a like, subscribe to the channel, and what you're going to want to do is hit that bell button, because this is a new channel. What that does is it notifies you the next time I upload a video, and that way you don't miss out on the future uploads. Again, with that said, thank you so much for being here. Thank you for your time. I hope you enjoyed, and I'll see you in the next one.